Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you. An absolute pleasure to be with my co-host on pre-Christmas Eve. Cory, Edge of Edge Realty. How you doing, Big C?
I'm doing great, sir. How are you doing?
Not too shabby whatsoever.
Feeling better?
Not too shabby whatsoever. Ready for the big man to come visit me.
That's right.
Yep, exactly. Dwight, Millard, Highlands Mortgage. How are you?
I'm doing fantastic. It looks like you lost your razor.
I did.
You're going to be Santa Claus in a couple days? Is that what you're going to be?
Hey, it's not going to be that gray. It's not going to be that gray. Well, I mentioned it on the show yesterday. It's like every male in the firm has either a goatee or a beard except for me. And I'm like, you know what? I'm joining the boys club.
There you go.
What happened to your goatee? You should.
Nah, I don't know. I just, you get tired of trying to keep it all straight. And it's just easier to shave it all off.
Let's see what I feel like after Sunday Sunday evening when it's time to get ready to go to work the next day.
I'll bet on Tuesday's show, it's not going to be there.
You're probably right. Yeah, that tends to be kind of, what happens with everything. I've tried it a few times and it's like, I'm looking a little shabby, but hey, we're going into a few days off, sir. What the heck? All right. Well, let me tell everybody what we have lined up for you this fine Tuesday afternoon. This is going to be a fun topic, guys. And I was having a discussion with a friend the other day, and we started to get on the subject of Airbnbs. And again, I want to just kind of preface this by saying we're not favoring Airbnbs. We know there's vacation. What's that one?
VRBO.
VRBO and a few others that are out there. So we're just using, for good or bad, Airbnb's kind of become like the word Kleenex, right? There's other types of Kleenexes, but everybody goes, I need a Kleenex. Well, when you want to, get into property rental overnight, short-term stay, everyone talks about Airbnb. So just keep that in mind. I'm not recommending the stock or we're not recommending their service, but again, using that as an example. So, when we own real estate, obviously there's different goals, right? Some people are long-term investors. They want appreciation, they want tax benefits, etc. But no matter what, almost all real estate investors want one thing, and that is cash flow, right? And they want it as quickly as possible. They want as much of it as possible. So that's why today, after I do the stock market recap, we're going to focus in on the short-term rental market. Again, kind of using this Airbnb model. So we're going to break down exactly how you get into the Airbnb in business from Cory. We're going to talk about financing from Dwight and back to Cory as far as property selection. And then how do we really generate the cash flow on Airbnb? Because Cory, let's kind of set the table straight. Years ago, it was much easier to get into Airbnb than it is now. We know, as we've discussed many times, a lot of towns, counties, cities, etc., have kind of put the kibosh on Airbnb for a lot of people. Others, you can still kind of do what you want. But, I think you agree with me. It used to be easier years ago, but there's still a lot of opportunity that is out there.
There's a lot of opportunity. So I think it's probably just as easy to get into it, but there's a lot of pitfalls in there if you're not sure of what you're doing. And I've run into them personally, and I'll tell you the stories when we get to that point. But yeah, I think the reason people like it is real estate's always been one of the easier things to start doing. We'll get into the leverage part, and you still leverage the heck out of it. And it's just an easy access into your own personal business. But now there are roadblocks in every different municipality that you have to be aware of.
Overall, what's kind of the feeling in Reno Sparks area, Cory, in regards to that?
What I see is I don't see a lot of pushback from the local municipalities, and maybe I'm, just for reference, I don't own any Airbnbs. We've never dealt with them in our business stuff, so I may be a little bit outside of it. But from a global perspective, I don't see a lot of pushback from the municipalities. Most of the clients we deal with them that own them, John, are the younger crowd, as you can imagine, because to them, and nothing against it, they grew up with it for the most part. It's been a part of their life. It's normal day. Whereas in the beginning, and maybe I'm still a little bit the same way. If I have the choice between an Airbnb and a hotel, I still stay in the hotel because to me, it's just feels safer, if you will. And I'm not saying that it is, but I still think, as we get older and the generation comes up, it will become more and more popular because people will have grown up with it.
Right, exactly. Yeah, and one was an Airbnb and another was, I think, a VRBO or something. I have not had good experiences myself. I'll just say that right from the beginning. What I have found to be the problem, we stayed in one in Florida a couple of years ago, and I let my wife kind of just handle it. And of course, the pictures look great. It was right on the water, and you get there, and it's like, you're almost in a back alley, and the water's like, a long ways away, and it was noisy, and the air conditioning didn't work. And I mean, I just went on. Yeah, we somehow stayed the one night, and then we're supposed to stay like 3 days. Like, no, we're out of here. And we went and got a hotel. So I think, what I learned, what you're talking about too, Cory, is you got to be careful, right? And this is why, frankly, some of the Airbnb hosts, obviously they're ranked and so on and so forth. But the ones that are good and they got good properties, good locations, good amenities, they're killing it, right? But all it takes is, again, a couple bad reviews on the site. And I think it makes it very, very difficult for people to do it. Dwight, what's your experience real quick?
Oh, I'm the opposite of you. We've had some very good experiences. I mean, there's been maybe a marginal one or two, but I mean, for the most part, it accommodates a bit more people, right? I mean, otherwise you got to get 3 or 4 hotel rooms. This allows you that flexibility. The one that was, we got a large one in Reno during my daughter's wedding because we had all these people, it was a big house. It was perfect. John, it reminds me though of, and you're probably familiar with the app, the car app, Turo, right? It's kind of the same thing. It's all about ratings, right? I mean, they rate you, you rate them, and that's what matters when people research it. So, but yeah, there are some definitely hot spots out there.
Yeah, exactly. And I will say, to use we did rent one down for a big family gathering down in Newport Beach, right on the beach, and it was phenomenal. It was expensive, but it was phenomenal. And I think you hit on something very important, Dwight, for those of you out there thinking about becoming an Airbnb host. And that is, when you have large family gatherings, that seems to be where it makes, number one, financial sense, because you can amortize that cost among, 2 or 3 families. But also, again, now you brought back memories, being, again, on the beach, and you're having coffee with everybody. And then in the afternoon, you've got cocktails and barbecue going on, and you're all there. You can't do that, of course, sitting in a hotel in many situations, right? So I think, again, from that standpoint, it's really something to look into.
Well, John, and that's their marketing. If you've seen the commercial, they got these people going into a hotel and they can't do anything. And then they go so.
I hate hotels. I'm very picky. I think hotels, especially nowadays, are extremely overpriced for what you get. They don't, 9 times out of 10, they don't want to clean your room every single day. And you got to ask for everything. And the little tiny coffee pot that, you take one sip of coffee and you finish. I like the home type of feel. So that's my pluses for, an Airbnb type of model. So I guess we're all different, right, Cory? Everybody's got their preferences, and some I would rather take a house that's moderate or something as an Airbnb versus a fancy hotel. I just don't like hotels. Yeah. I think you're the opposite.
Yeah, I'm still old school. I like the hotels.
But you're pretty tight. Have you graduated above the Motel 6?
There's nothing wrong with Motel 6.
I didn't say there was. Just wondering if you graduated.
Matter of fact, I'm at Motel 3.5.
There you go. Motel 3.5. That's right. Half the price. That's right. All right. Let's come to an interesting topic. Again, we're going to get into how we select the properties, because, again, it's a completely different model. If you're looking to become the Airbnb type of host, it's a completely different model than going out and buying something that you're going to do a long-term rental on, or some of the other aspects of real estate. So I think, again, that's going to be very interesting. All righty, boys. Well, let me get down to the stock market side of things today. Very typical of a holiday shortened week. And again, just to remind everybody, the market will close at 10 o'clock tomorrow. We'll have a full session on Friday, of course, closed for Thursday, Christmas. So a lot of traders are trying to get everything in and get, frankly, start to get the year wrapped up, even though we have a few trading days next week. But we've got some momentum to us. We got the wind to our backs at this point. It seems, very, very broad-based gains that we're seeing across the board. We've finally pulled ourselves out of the doldrums when it comes to the semiconductors and the AI-related concerns that have been, weighing on the market last week. And so we found ourselves in that situation again today, where the market just, right from the get-go, right from the pre-market all the way through, started to do very well. As a matter of fact, we closed nicely. And I can say, Dwight, the S&P 500 did what today?
Another record-setting day.
There you go, brother. There you go. Record-setting day for the S&P 500. 6909. I'm going to round it out because it's almost there. Well, let's call it 6910. 31 points, 0.46%. Dow for the day, kind of quiet, up 80. Closing at 48,442. NASDAQ up 133.57% to close at 23,561. Just a couple of names that were big movers today. Can't have a show without talking about NVIDIA. Nice move again today. 53-cent gain, 3.01% increase to 189.22. Broadcom was up 2.3%, $7.87 $349.32. Google higher by $4.31, 1.38% to $315.64. The list goes on and on. I'll kind of wrap things up by just reminding everybody where we sit on this year-to-date basis, and it's looking strong here. 22% increase year to date on the NASDAQ. S&P up 17.5% for the year. Russell 2000, 13.9% gain. And the Dow Jones Industrial Average, also 13.9% gain year to date. So, Cory, if we threw it into real estate, you'd be happy with those kind of returns. Stock market wise, we're happy with those kind of returns also.
Absolutely. And I'd be curious to see what the lows were to the highs. Like it sounds like just a nice even line, but
no,
it's been.
As a matter of fact, it's so funny you say that. I went back a little bit yesterday morning, and because every day I track for some of the metrics within our firm, our assets and performance and so on. So every day we track all that, but I also track what the indices did. And you're so right, Cory. I went back to April when the tariffs were announced, and I looked back and I went, oh my God, I can't believe how far we have come since that time period. I mean, on all the major averages, it was just a devastating month of April. And here we are now at record territory, on one average and so close on the other one. So you're right. Never a straight shot up, but got to hang tough, have a diversified portfolio, listen, become educated, and you will survive just about anything that is out there. All right. So you're up to date. We'll hit the commodity side and, of course, mortgage rates when we come back. But first, let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Merry Christmas to all of you. Joined, of course, by my buddies, Cory of Dwight, Millard of Highlands Mortgage. All right, once again, we finished with a gain of 80 on the Dow. NASDAQ up 133. S&P to our record close up 31 at 69.09. All right, let's go to the commodity side. Oil for the day was up 37 cents to $58.40 a barrel. Gold price is $36.10 gain. This gold is just on fire these days. $4,505.40 an ounce. Mr. Millard, unchanged on that 10-year treasury. I think the bond traders all headed out early. How'd we do on the 30-year?
Yeah, you hit it right on the head. You don't see goose eggs very often, but 30-year fixed rate, 6.24, according to Mortgage News Daily. I think this is probably where we're going to sit at least until the first part of January, maybe into the middle of the month to get some kind of a direction. But, John, I've been speaking to a couple of listeners that are looking at maybe doing something next year. And I'm going to go on the record. I think you're going to see 5 straight quarter point drops.
Ooh,
5 straight. 5 straight.
Aggressive 5?
5 straight. The first 5 will be a quarter.
Well, it's kind of ironic that you bring this up, Dwight, because did you happen to see the story on CNBC today with NEC director Kevin Hassett, the one that's, running either number 1 or number 2 to be chosen by Mr. Trump? Did you happen to see his comments today?
What?
Did you happen to see his
No, I didn't.
Today?
So did he say the same thing?
Let me share this with you.
Nope, did not see it.
Here we go. National Economic Council Director Kevin Hassett said today that the Federal Reserve is not cutting interest rates quickly enough, even though the U.S. economy grew at a much faster than expected pace in the third quarter. Hassett, who is a leading contender to succeed Federal Reserve Chair Jerome Powell, when his term ends in May, said the artificial intelligence boom is boosting economic growth while simultaneously putting downward pressure on inflation. Quote, if you look at the central banks around the world, the U.S. is way behind the curve in terms of lowering rates. He said this to CNBC. U.S. economic growth came in, of course, at an annual rate of 4.3% in the third quarter. 3 Fed governors that we know voted against it. Trump wants it lower. And let's see what else Hassett said. He said that independence is real important. Let's see. Hassett said, in the end, it turns out that I think it has a lot to do with the news coverage and how people are processing their glimpse of the outside world. When asked about Trump's sagging approval, that's what that was related to. But the title of the article is Hassett is on the latest, indicating that we are way behind in lowering interest rates. I saw some projections today. 2, 3, right around there. You're the first one to go on the record, Dwight, saying
5 straight. Quarter point. Don't screw it up. Quarter points.
What is your logic? What is your logic?
Exactly what he's saying. I think we've been too high too long. And I really think this election year is going to have a lot of impact on the decisions making because people are not seeing, yes, you hear a 4.3, GDP, but they're not feeling it yet. So they don't have a lot of time here or they're going to be maybe in trouble. So I think it's going to come fast.
So what you're saying is, in order for the Republicans to remain in charge,
Yes.
they need to do something really good
Yes.
that feels good to the consumer,
Yes.
i.e. the vote.
Yes.
And hence, cutting interest rates would be one of the number one ways to do it. I agree.
That's my rationale.
I'm proud of you for bringing up the election side, because not enough people are talking about that. It is very, very important. I look at it from the standpoint, as we've discussed many times on this show, whether you get Hassett or Kevin Warsh or whomever it is that Trump finally chooses, they are going to be, no matter what anybody says, they're going to be yes men to the president, because everyone that's in top running, they are all close to the president. We know it. It doesn't take a rocket scientist to figure it out. They're going to feel the pressure from him, and they want to please him. And the way they're going to please him is lowering interest rates, probably beyond. Again, I think you may be spot on, Dwight, because no economist out there is doing that. Matter of fact, so many of them are going, we are not going to get anything in January, maybe one or two next year throughout the rest of the year. But I don't think that's correct. And I agree with Hassett. You look at what AI is doing to the economy and so on and so forth. Yeah, I think you're right there.
Now, what it will actually do to the 30-year fixed rates is anybody's guess, right? Because the bond traders got to follow.
Sort of impact there. So where did we close on the 30-year today?
6.24.
Okay, so you're solidly, after the Fed interest rate cut last week, now you're solidly below that 6.3
9, 6.38 we were at, yeah.
Yeah. So I like the 620. Cory, is that getting anybody off the fence at this point? Any potential buyers? I know it's a bad time of year to be talking buying real estate,
but it's been decently busy still, even for this time of year. So yeah, I think the weather's been awesome. Sometimes it can be counterproductive, and Dwight's mentioned this before. If you have a buyer out there who also thinks you're going to have 5 in a row, then they may sit on the fence in anticipation of that lower rate. We'll see how it plays out. But how many meetings does Jerome Powell have left? Do you think that would be him cutting at every one of his meetings? Do you think he's really going to do that?
Yeah, he would.
No, I don't think Powell will. But I let's see. Yeah, I'll look up the calendar, because I know we have the January meeting, but remember, you only have 9 meetings throughout the year, so I don't know off the top of my head which ones they're going to skip. But regardless, Cory, even if Powell doesn't do anything, between January and May when he's gone, I, in my heart of hearts, believe that the first meeting that the new Fed chairman's in there, you're going to get a rate cut.
Yep.
I promise you that.
And the market's going to have anxiety over how big of a cut. If it's just a quarter, maybe they're expecting.
Well, yeah, but why would they? I don't think they have any incentive, to Dwight's point, to do anything more than a quarter cut. Because you're right. Both of you are right. It would rattle the market. It's like, you're playing catch up because maybe things aren't as good. I mean, frankly, guys, we still really don't know how the economy is doing. This data is still so messed up from the government shutdown. Many are saying the jobs numbers aren't accurate. The inflation numbers not accurate. It's going to take, probably a couple more months of reports before people start to go, okay, now I see the trend. We're going up, going down, whatever it may be.
Yeah. So John, you got a January 29th, a March 19th, a May 7th. So that Jerome Powell's still in May 7th?
Yeah, I think he's mid-May. I think.
Yeah, that's what I thought. So he's got 3. Then you got a June 18th and a July 30th. That's your first 5.
Okay, there you go. So maybe 1 while he's in. Again,
3
looking good for January, but maybe 1 more while he's there, and then that would leave 4 more for the new chairman. That's going to be interesting, guys. That's all I can say. It's going to be interesting to see who really ends up, coming out right as far as the number of cuts. But there will be more. There will be more. And again, like we always say, date the rate. Date the rate. If you find the perfect place, Cory turns you on to the perfect place. Get it. Lock in the loan with Dwight. Get the loan. And then, Dwight, let's wrap it up on this as a good reminder. Where's the spread that you are comfortable with right now before someone starts or should consider refinancing, i.e. you get them in at, say, 620 right now. Let's assume no point, buy down, nothing. You get them in at 620.
Yeah.
Do we want 520? Do we want 5? What's that spread before they start thinking about when it's time to refinance?
Well, John, I think it's time in the mortgage loan itself too. But if you're in it just for a short while and you get, I think if you can pick up a point, it's worth it. Some people would argue that you get solicitation at a 1/2 or 3/4 a point because you can save X dollars. But I think most people, generally speaking, probably, John, look for a point to a point and a half is what they look for.
Yeah, I remember you've always said point and a half. That's right. But I know sometimes in some conditions you narrow that down. That's why I want.
But if you're at 6.25 and you want 2, you got to get all the way to 4.25. You might be okay at 4 3/4.
Right.
Yeah.
Right. Okay. All right. Very good. All right. You're up to date on what happened in the market, the mortgage side, the commodity side. Now when we come back, let's have some fun and talk about short-term cash flow via short-term rentals, i.e. an Airbnb type of model with Cory and Dwight. Let's start over to Jack Sabian. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory of Edge Realty, Dwight Millard of Highlands Mortgage. Again, Merry Christmas to all of you. All right, we're going to get into our topic, Airbnb real estate, the financing, the cash flow, and the smart strategies to make this a success for you. So, Cory, I'm going to start with you. And I'm gonna ask you a very, very blunt question that I think is the only way to kind of set the table on this whole scenario. And that is this. Is Airbnb still worth it for next year?
Yes, I would say absolutely. The thing that I see with this, and again, I guess you can call me an old timer now. I'm used to the stuff that we own is the traditional long-term leases, long-term that's just what we grew up with and how we've invested. This to me is the newer, fancier, probably better cash flow way of taking a single family house. So somebody like me and some of my partners, we look at them and say, okay, if I have a house and I can get X amount more cash flow on short-term rentals, that sounds great, but how much more work, how much more time, those are the things we value now. Whereas when we were younger, I would have owned 20 of them and I would have been there 24 hours a day fixing to like whatever it took. So I think it's going to be an incredible part of the real estate market from here forward, because I think as, our generation kind of terms out and the new generation comes up, they'll have known it, they'll have the processes down, and it does cash flow better than regular, long-term rentals for sure.
Right. Right. As long as you get the rentals, right? You can, there are a lot of people, I remember during, the presidential election in the Phoenix area, because there was a lot of campaigns and things going on. People were complaining that like no one's renting my Airbnb, right? Because the market was so saturated. And I was going to ask you real quick before we turn over to Dwight. Southern California, I'm hearing a lot of people are getting into the Airbnb market. I know it's tough because the housing market's so small because of the Olympics coming in a few years.
Sure.
And they're trying to capitalize.
And then you have two different things there, right? Like a presidential election versus the Olympics, right? Like the Olympics should be a bigger draw. I don't know how good they are, John, but I have looked at this market before, and there are data centers you can go out and look at, and they'll give you the saturation level, what the average rents are. I don't know how accurate it is, but it's just like anything else. If the three of us get into the business and we're younger, there's a little bit of human greed. So we say, hey, well, I'm going to charge $5,000 a night. Well, and maybe we do our numbers that way, not wanting to understand that the market may not bear that 360 days a year. So you have to be a little smart with it too.
Speaking of being smart, Cory, then we'll move on to our second point. Don't you, or wouldn't you agree that you were saying, years ago, it would have been completely different than where it is now, that an Airbnb owner, they've got to go almost the extra mile to stand out because there is so much competition now. So it's not, I'm going to throw a blow up mattress in the living room and call my place an Airbnb, right? You got to have some nice amenities, the wireless entry, the internet, on and on and on as far as the amenities to really stand out. Yeah,
you have to have all that stuff. My family and I stayed in one in San Diego earlier this year, right in Mission Bay. And, if people are like me, when I look down there, I want to be right on the water. And so I understand that's a little bit more expensive, but the price would have had to been massively different for me to stay in from the water. So you have all these little amenities. You can't just look at Mission Bay and say, I'm going to buy a house because here's what I get. There's all these little intricacies. We'll be down in LA next month. Again, my criteria was right on the water. I couldn't find what I wanted, so we're going to stay in a really nice, hotel down there. So
yeah, there you go.
There's a lot of competition for sure.
Yes, no doubt about it. All right. I guess the second point, Dwight, is really going to be in your neck of the woods, the financing side of things.
Yeah.
I come to you with that specific goal that I'm going to buy this rental property and it's going to be an Airbnb. Is that what you want to hear?
No.
I said, no.
No.
Okay.
You're just going to buy a rental, right? And what you do with it, John, they don't allow for us to finance mandatory short-term rental programs. So if you have to be mandatory in a pool, I can't do it because we don't like the short-term Cory and I think we had a mutual client, I think, trying to buy up in Tahoe that was a problem. You had to be in the mandatory pool. And so you're just buying when you buy it, you automatically have to rent it out short term. Part of your this was a condo, I think an incline, right, Cory, or somewhere around incline. You had to be once you closed on it, there was a certain amount of days you had to release it into the pool for them to rent it out.
Because of the HOA rules
because of the skiers and all that. So you had to be put into you had to offer your unit up.
It's complex rules is what I'm
saying.
Yeah,
you had to offer your unit up to the pool. Yeah.
Right. Okay.
So you're just going to you're going to just tell me you're buying an investment property. We're going to do whatever we do. We're going to do it. And then if you convert it to a short term versus long term,
that's your prerogative.
Yeah. Mm-hmm. Yeah.
Obviously, you don't have that issue. What if I'm going to buy a house?
That's fine.
Do you want me to tell you that it's an Airbnb?
No.
Just don't you mention it, period.
You're buying a rental, whether it's a condo, townhome, And what's interesting, Jon, is when you look at these Airbnbs or these short-term rentals, I sit there and I go, gosh, who would want one in Fernley? But it's amazing that they get rented. I do like the more vacation destination rental types because that's where we all go and we try to get one. But, with FIFA coming, they're already talking about if you're going to buy a short term, buy it now, especially around the FIFA, areas because people are going to need them.
So Dwight, okay, so you don't want to know that it's going to be an Airbnb type of program, but again, we want to let our potential lender, obviously this is going to be a rental. And again, you can give us some credit, not the full amount of what we estimate the rents are going to be accepted.
Yeah, I get that just right from Richard Lace, right from the appraiser. We'll put on there what the market rents are, and I can give you 75%, credit off of that amount. So,
but that's of a traditional long-term lease, not of short-term rental history.
Yeah, but that's why we keep it out. Otherwise, I got to suspect, Jon, that if an underwriter looked at it short term, you're going to have a hard time, especially if you have a hard time qualifying. Now, if you have no qualifying issues, you probably do whatever you want. But most people need that rental help.
Okay. All right, Cory, let's go into the next point. Back over to you. Thanks, Dwight. Let's go over to the next point with you, and that is something we've discussed many times on this topic, and that is understanding the local rules and regulations. You can really get yourself in trouble going in. Hey, I'm buying this house. You get financing, you get it, you buy it, blah, 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 renovate it. It's ready to go. It's a turnkey property. And you forgot to check the local regulations. They're like, you're not going to do it.
So more and more municipalities require a license, a short-term rental license, and they all have different rules. So Washoe County requires it now. You go up to South Lake Tahoe, they require it, but it's a whole different set of rules up there. So you have to not only know if you need a license, but you need to know what the rules are for the license in your specific location. And I believe, again, I might be wrong, I believe both Washoe County and South Lake Tahoe have a maximum amount. So once they hit that amount,
yes,
they don't let anybody else in.
I heard, I don't know for sure, but I remember I was reading, I don't know, a month or so ago, Tahoe, I guess, is repealing it now because you could do it, right? You could do it. And then they came out and said, nope, only a certain number. And they grandfathered people in. That was it. No new applications. And now I'm understanding they're repealing it. So again, I check into that if that's going to be an area that you're looking to do Airbnb.
The other thing too, is you have to read not a lot of these, but I would say a good amount of these are going to be in an HOA, homeowners association controlled development, condo, neighborhood, whatever you want to call it. You have to read those rules. So I had just real quick on a story. We owned a condo up in Incline forever, my partner and I. We were never up there. We'd go up in the summertime for a week each, and then it just sat there. So I told my secretary at the time, actually it was her idea, hey, you should short-term rental that. I said, great, let's do it. Perfect. Put some money into it. She did. I mean, I don't know what we spent, 20 grand to get it all nice and ready. Go to put it on the market, get a letter from the HOA. No, we don't allow short-term rentals. Somebody needs to read. I mean, I'm the guy that reads CC&Rs, and I didn't even read the CC&Rs. So we just scrapped it, wrote it off on the taxes and called it a day.
Yep.
even if you can get the license from the county, the HOAs trump it. The HOAs are what control. You have to know what your HOAs say.
Glad you brought that. Yep. And it's not just condos or something. I mean, obviously most of the housing tracts now, and yep, you got it. So do your due diligence by all means. All right, when we come back, we'll talk about let's talk about self-managing, or do we hire a property manager? Because Cory, you're saying there's a lot of work involved. So let's kind of assess that situation. Let's wrap it up with Kristen Snow right now. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. All right, we've been talking about Airbnb, real estate, financing, cash flow, smart strategies related to it with Cory and Dwight. Cory, your phone number, please. Mr. Millard.
Yes.
Beautiful. All right, guys, let's move over into the management side, Cory. Again, like in any type of rental, do we self-manage or do we hire a property manager? I could really make it the case, I think more so, in my opinion, if I were to do this, to hire a property manager, because you got that turnover all the time, unless you have the time and you don't mind making beds and, doing it on a very frequent basis.
Sure. And I think it's like the way I look at it is if the three of us go out and buy our first Airbnb, we're going to treat it as a startup, right? Let's keep costs down. We're going to go make the beds. John, you do it on Tuesday. Dwight, you do it on Friday. Try to do all that stuff. As you grow, then it's going to be a better use of your time to sub those things out to people who do them. And I would guess, John, again, I'm not in it, but I'm guessing This isn't new news. There's probably companies built around the industry. There's probably maid services that cater to it. There's probably,
absolutely,
bed makers and all the different people that cater specifically to it. So you may be able to let someone else manage it. Maybe you have to manage the people, but not the property, if that makes sense, because they may all
do that.
5 different phone calls to handle everything instead of being over there. So
yeah. Because that's one kind of complaint I've heard from clients that have done the Airbnb is it's a lot of hands-on, right?
Yes.
That house is getting a lot of wear and tear. Generally, especially if you're in a like a Lake Tahoe type of location, everybody's in a party mode. They're not giving a damn about taking care and taking their shoes off and on and on and on. So make sure you budget what their advice was, make sure you budget enough money for repairs and obviously the housekeeping and so on and so forth. Dwight, what would you think are some of the most common Airbnb mistakes that people should avoid?
I think the first one would be the simplicity, like Cory referred to. I mean, it's not, you've got to understand what it's going to take. So I think people kind of go into it. This will be great. I think people get into partnerships that they wish they could get out of. They don't understand. I mean, it's all about rating, right? So you've got to be the nicest. You've got to be the best looking dance partner in the bar, you got to be. And so you've got to put money into it. Like Cory said, they put $20,000. You got to make it look like it's home. I don't think they appreciate that enough.
Cory, is a common mistake, like any form of real estate. People get so excited about this. I know when let's go off personal experience. When I personally have seen people, be successful, I'm like, I got to get into that, right? And they're like, oh yeah, I'm booking this thing out at $1,200 a night, and you do the math and But I can see overpaying for the property would be really easy in this type of model.
Not only overpaying, John, but I would guarantee you that people are overestimating their net revenue, because when you have long-term renters, you don't have to figure out the cost of toilet paper, figure out the cost of towels, figure out the cost of the coffee that stays in the shelf. You don't have all those expenses. I was reading before the show, the average income, the average net revenue is only 10% of the gross revenue if you look at Airbnbs. I mean, that's there's other stuff in there, probably fixed expenses, but I would guess probably 50% expenses on these things before debt service and the rest of it.
Yeah. All right. Well, like anything, you got to run the numbers. All righty, boys. I've enjoyed it so very much. I wish each and every one of you and your families a tremendous Christmas. Merry Christmas to you guys.
You too, buddy.
Merry Christmas.
Love all of you. Merry Christmas to everybody. We'll be back with you, of course, on Friday on the Jon Sanchez Show. See you, boys. Merry Christmas.
Merry Christmas.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited and Equal Housing Lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.